The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday on market days, 11 o'clock till noon, right here at this particular time. And fascinating market we've got here. As you think that we're about to roll over, so that rotational correction picks up with those momentum stocks, allowing them to ameliorate the negativity that you would normally see. Unbelievable how this happens. Fortunately, we've been recognizing this a possibility, and I can't believe that at this particular point we do not have any shorts. No, sorry, I should not say that. We're still holding one of the shorts from a couple of points off its top, and it's had a huge move to the downside, but we also negated that a little bit because we did go along that same thing. This is the IBBs, biotech sector, because it looked to me as if it was making a little bit of a bottom, and it was a tradable bottom. And so far, it's kind of working out up 10 points, but, you know, I think it's becoming, it's getting to the volatile stage and in the bounce. So we're going to have to watch it closely. Have a look at the E-minis, up 5, broken out, broken above the 1880.50 previous PT high 7th of March. Today's high so far is 1883.50. And what I think is very important about this whole aspect is that within the context of the rotation, you would normally anticipate that that the volatility index, the VIX, should be, because of this little bit of uncertainty, the S&P, or let me give you the numbers. The volatility index right now is at 13, down 10 cents. But what I need to do is just run the numbers. Let me do that, get it out of the way, because there's a chunk that I need to talk about today. Right there. So we've got the Dow up 26 at 16,559. The S&P is at 1889, up 422. The Comp Index is up 7 at 4275. You've got the DAX at up 24. That's very interesting. But gold, and this is the thing that I mentioned to subscribers on my opening call this morning. Gold looks ready for a bit of a bounce. I thought I really took some time trying to think through the whole aspect of, is this a tradable bounce? Is this a bit like the IBB? And then I thought to myself, the more I looked at the GLD, more I looked at the gold contract, more I looked at the spikes, the stocks, gold stocks and silver stocks, the less inclined I was to add to our long positions. And one of the reasons is that if you look at the GCM, that's the June contract of gold, up nicely here at up 1260 at 1292.60. The flatness at 4.56 of the slow stochastic and the width of the MACD says this is a bounce, could test the 1301 9-period exponential moving average, maybe even go a tad higher. But everything about it says that it should fail and come back and do a retest. So maybe I missed a great opportunity at the most recent lows of getting maybe, you know, some low price gold stock, nice percentage gain it could have. I was prepared to give up that opportunity. I just felt that slow stochastic. Remember, when we're looking at a stochastic up in the 95 area, 96, that's exactly the same thing. You know, I always say, oh, that's fantastic. That's so bullish. You want to, as long as it remains there, you want to be buying because that's in buy territory. When it's on the downside, you've got the slow stochastic saying I've got no strength whatsoever. I have only weakness. Do you want to buy weakness? And the answer is really maybe the on-balance volume can reverse to a V-shaped pattern, but if the slow stochastic stays in the single digits, I don't really want a part of that. Okay, so now let's go back to what to the stocks. We're looking at silver. Is up 33 cents at 20.02. High-grade copper is having another good day. It's now at 3.04, up 80 cents, up 8 cents there. So what we're looking at is bonds are down 30 seconds at 131.28. Now that to me is very important. Why? Because if you get the volatility index declining, which shows buying pressure, and now you've got the TLT after this peak C, it should have gone to a D at least, pulling back in this V-shape, this Eiffel Tower, straight up, straight down pattern, especially in the 120-minute chart. Oh, man, another peak D right there. I can't tell you how many peak Ds I've gone through over the last couple of days, especially in the 120-minute charts. And it's pulled under, in both instances, it's pulled under the 107.80s, which was the 200-period exponential moving average support. So, now, so let me just look at this. So that's the monthly chart of the TLT. Yeah, you know what? If I have a chance, there's no real rush. Today or tomorrow, I'm going to spend a little time going through the bonds. I'm going to show the long. I don't know why I don't have it anymore. At US, it just disappeared. I don't know what they did to it. The people who do the these different contracts. I used to have this going back to 1980. Oh, no, even further back, 1970 something. And now all I've got is this thing going back to 2001. Who needs that? I wanted to show the long-term channel. I've got it somewhere, I'm sure, of bonds, 28-year up channel. Well, that channel, just like GE on the weekly chart, a lot of activity on the line. That's a major final support line. I can just tell you, if bonds at all crack 120, 128, you got to be careful because that low, well, this is a continuous contract in the 128 area. Then the 125s becomes a target, and that was the low back in September of 2013. It's really important that bonds really push higher, and they push higher very soon. So there was a chance of that. Oh, it did make a D. I'm sorry. Wait a minute. Oh, look, a D and an E in the weekly chart. I was remiss. I kept having a longer-term chart of the bonds. When I did this, all I should have done was had a look. So peak E possible this week in the bond contract. Wow. That's saying that bonds could keep going down and rates could start to rise. Whew. That is very interesting. Going to watch this really closely. Oh, I'm so pleased I did that. Now, a couple of questions in the den before we go on to, now let me just show you the euro, EUR, USD. Euro has made a peak E way back on the 12th, I think it was. Let me just check the date. On the 13th of March, and it's pulled back sharply. Peak E in the weekly, but no real signal yet in the price because it's holding the 9-period moving average. The technicals are starting to weaken. And you've got leg E possible. If there's no new high this month, it'll be a peak E in the monthly. But the month has just begun, so I don't even want to get into that. Could I look at the pound? Absolutely. I'll look at the pound. BP, at BP. Oh, boy, I hope I've got the long-term chart right here. Blank. Unbelievable. How many times am I supposed to do this? Oh, it's just in a sideways trading range. A, B, C. That's a D, so peak D monthly. Just rolling over a little bit in the weekly. Let me just do this. Low bar. Then you go British pound continuous contract. A, B, C, D, E. A. Oh, this is B, C. Hey, wait a minute. That's going to be very interesting. I've got a peak C. No other way I can count it? Nope, no other way I can count it. The peak C in the weekly chart, that says it should be a D. There's no other way I can count this. It can't be FGA. Well, I suppose it could be, but I'm calling it C for now. Yes, so that's going to be very interesting. It's saying that over a period of month or 4 to 6 weeks, we should possibly make a new recovery high level consolidation in the daily. Hope that helps you. And the levels to watch near term are, it's at 1.66 on the continuous contract. That's usually very close to the trading contract. So I'm going to just tell you that if there is a pullback below the 1.655 area, that's going to be pretty negative. It will be retesting the low of 1.645 that was made about 2 weeks ago. But if it breaks out on the upside about 1.6675, that says yes. Watch this, because this is the pattern that I'm looking at. You see this on the weekly, that flag pattern? It's not a falling axe pattern, it's a flag pattern. Flag pattern says you break above it, you should retest the previous peak, and that was the peak of the week of the 21st of February. Hope that helps you. Other question is, Basil, you indicated the longer trend of gold. This is Art from New Hampshire. Basil, you indicated the longer trend of gold is down. Did you not? Yes. At coffee this AM, someone mentioned Harry Dent, who said we will encounter deflation and gold will go down and dollar up long term. Your comments. You know, first of all, I don't want to get into the Harry Dent thing. Harry Dent is notorious for, as markets are moving up, to start projecting a double of whatever it is, and as they're going down, a double whatever it is on the downside. He is often correct, but he is often correct after the cycle has been made. In other words, he's often so early that he's actually very late. So if you're expecting that he's just said it now and that we will go on to do it very soon, that doesn't often happen with Harry Dent. I love some of his thinking. I love out-of-the-box thinking, the broader aspects of what he does. I love that. But as a market timer, the history that I have, at least, of following Harry Dent, and I don't do that every day, I don't do it every week, don't do it every month, but just when I hear his name, I check things out, or someone sends something to me, and I just cannot... all I can say is, I'm not talking about Harry Dent. I'm saying that I'm looking at gold. Let me just do this now. It's a good question, because actually, it's funny. I got a number of questions over the last three to five sessions asking just about the same thing. So let me just deal with it right now. What I'm looking at is that incredible move up in gold from the December, I think it was, when XAU was at about 44 back in 2000, in that period. That incredible move up to the 1900s, the give back that we've just had is saying in the pattern that I'm looking at that there's an H to an M in the monthly chart forming, and invariably the low will be tested. And in this case, it's the low. I'll give you the number, but it's a continuous contract, so that is, the numbers change. So I've got a number of 1179 back on June the 13th. It's the date, the low of June of 2013. At some point, that will be tested. And if it breaks, I then have a target of the low of February of 2010 at 1084. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Dow's up 20, S&P's up 2.57, and we're going to go straight to George in New York. Hi, George. How are you?
Basil, good morning. How are you today?
I'm very well, thank you.
Good, good. Basil, today I was calling, I wanted to check on Gentex, GNTX.
Okay, so Gentex, now, if I remember correctly, I don't know what they do, but I think it has something to do with the auto industry.
Yes, it does. They're a parts supplier. They do auto-dimming mirrors.
Oh.
And they're also, they produce backup cameras.
Oh, that is becoming
there'll be a new law going into effect, a new federal law going into effect, that backup cameras will be mandatory by 2018.
I saw that in the Consumer Report, yes. So, all right. So
and
now
it'll be scaled in from 2016 on. So we have a lot of time to get into this position because as of now, I think you saw that, I would prefer to get it at a lower price. Let's put it this way.
Okay, so let's do this here. Folks, we're looking at GNTX down 42 cents at 30.96. Gentex Core, as George says, auto parts, backup cameras, the whole works. Now, what's interesting in the monthly chart, it's made a big U pattern, and it went to a peak D. Well, the low bar was back in 2008, November. It beat the market by making a low before the market did at 6.50, and then it ran up pretty nicely to 35, so that's a six-fold increase, January of 2011, and then it comes back in 4 troughs to the downside, 4 peaks up to D, and 4 troughs down to trough D. Then it goes A, B, C, and what does it do? It goes back to a D in January, I think. Yep, January goes to 34.41. Where did it stop on the way down? Right at the 200-period exponential moving average. It's amazing how these longer-term moving averages work. And one of the reasons why it works so successfully, this is my own opinion. It's empirical. It just seems to me that if it's integral to the character of the makeup, mathematical makeup of the moving average, the look-back period of 200 periods does become very important. And why does it become important? Because it is in the way that it is looking at each bar. By the time it gets to this 200-period moving average, which starts working historically, that is a foundation of support, and you've seen it so many times. And maybe it's 200 simple, but that 200-period moving average is very important. I happen to love the exponential, and it just seems to correlate very well to where, after a number of periods, what was just a distant moving average gets closer and closer and then becomes very important. Now what I'm looking at is, in the cup formation, the stochastic's at 84%. The MACD is still good, but it's way under what it was back when it made the previous high of 2011. So I'm thinking you're absolutely correct. Looking out, this is still a very strong chart. Looking at the weekly chart, I drew this in, and it's a very interesting thing. It's got a rectangle formation. It's a formation that I was showing a moment ago that's the same as the gold chart monthly, because what it does, it shows the technicals are very weak. The price is held, but it's in the lower half of a larger rectangle formation between 34.41 and 29.59. My suspicion, from the way these patterns pan out, is that there will be a test of the 29.71 level. That's just a point away. It's not a big deal. But the visuals that I'm looking at are saying that unless Gentex in the next, I would put it, since I'm looking at a weekly chart, I would have to put it by about April the 15th, the week of the 15th. If by that point it hasn't taken out 32.18, between 32.18 and 32.50 is very strong resistance. If it does take that out, then I'm saying to you, hey, I think you can start a small position. It'll be the position that's going to tell you whether or not it's going to challenge the all-time high of 34.41. And if it breaks above 34.41, that's still leg E, but the MACD and stochastic should be very strong and suggest that it's going to go even higher from there. So that's the level I'm looking at on the upside. On the downside, I'm a little suspicious here because the daily chart, it's worth taking a moment here. I just want to explain that the daily chart has a close-up, and I'll explain what I'm looking at here, why this is a very important couple of days coming up. So, George, if you can hold on, I'll be right back. Dow's up 18, S&P's up 3.5. Basil Chapman, I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
And Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and let me just get back to GNTX, Gentex. Oops, wrong chart. Let me go back there. That was a mistake. Okay, press the right button. We get the right answer, and we're going to go back to GNTX. So the pattern that I was looking at on the daily chart has the H. This is in the Chapman Wave methodology. Let me just show the CD here. I was going to talk about, it's actually almost like a restart. Should I look at the restart? Yeah, the restart. This is not a restart. Let me just have it. Let me check it out. Yes, it has not taken out the low bar of 29.59. 29.59 made on the 29th of January. So what we've got is we've got one H pattern. And the Chapman Wave methodology, those are the lowercase h's. Looks just like that. And now we're actually getting into what I call the H turns into an M pattern for lowercase m for mother. And this says to me that there's not enough strength in the stochastic and the MACD. That's why it keeps on pulling back. It's a very powerful pattern. Let me just show this here. This is the, I think, Chapter 17. Let me just check that out. Yep, there it is. Chapter 17, the H pattern. And this is what it looks like. It at a certain point, it comes down, and then it forms an H, that goes to an M, and now you can see it's exactly the same, this pattern that I've got here on slide 335 out of 476 in my CD introducing the Chapman Wave methodology. Oh, George, just give me a second. I must mention the front page of TFNN, folks. If you go to the front page of TFNN, you'll see that I'm giving a Master Trader series. It's a level 2 on the Chapman Wave. Basically what it is for those who have done my webinars before, who have my CD introducing the Chapman Wave methodology, actually use the Chapman Wave in your trading as part of your trading. So this is where I expect that you do know about the H's and the M patterns and the falling axe, etc., and that we can just move on from there, although I will review each one as we get to it. So it's in Boston, Saturday the 5th of April, 8:30 to 4:30 at Babson Executive Conference Center in Wellesley, Mass. It's a great place to have it. It's also accommodation if you want to stay over. So I'm really looking forward. Go to the front page of TFN and check it out. And now let's go back to this pattern. So the H goes to an M. At a certain point, if the 29.59 level is not taken out, the last low 4 days ago was 29.71, close, but it didn't break it. This says that the next rally, if it takes out, certainly if it takes out yesterday's high of 31.90, then it has a chance to go up to this very difficult 32.50 area. That's the candle, the daily candle of the 3rd of February. But I'm suspecting that you've got a little time here, as you say. I'm inclined to suggest to you that as a longer term position, if by today's Wednesday, a week from today, if the 29.71 area has not been taken out and is still trapped in this range, that the next rally, in fact, if it's going to take out the highs, that should happen by Monday or Tuesday at the latest. It should certainly take out today's high of 31.90, trading at 30.93, a dollar lower. It should take it out real soon. If it starts to do that, George, I'm going to suggest that you nibble on a position, knowing that it's a position that's going to tell you, because you watch it so closely, how it's reacting to the general market and how it's acting independent to the general market. Because this is a stock that, in a sense, has gone with the market, but it hasn't, in the last 3 or 4 weeks, it hasn't been able to break out to the upside. That says perhaps it falls into the category of former leaders are now taking a well-earned break. So those are the parameters.
Also, too, if I might say, too, from a fundamental basis, to me, it's already valued for this year.
It is? Okay.
It's at 31. Based on the industry price to earnings, it could be a $38 stock topside right now.
Right.
So, and...
Well, that's a good 12-13%. That's good.
Yes, it is. Exactly. So you can play it out that way.
I just want to interrupt for a second because I don't want to forget about this. It has made a peak D in the monthly, and the peak D also is suggesting that there's a rectangle, a larger rectangle between just over 34 and just under 29.5. Well, 29.5 is the 9-period moving average. So that's the range. This could be stuck in a range for a little while. So my suggestion actually says that if it goes to, this is a nice way to do it. If it goes to 30.25 and starts to hold there, if you wanted to nibble, if it took out 29.59 by 1 penny, even though it could actually reverse after that, I would get out. So you've got yourself a 70-cent stop. But the reason I'm thinking here is that it could be in the rectangle formation that says you buy at the lows and you sell at the highs. And it could keep doing that. And that could give you a nice 2 points on the upside. And then you wait a little bit and you could keep doing that. And at some point, it'll break one of those patterns. So I hope that helps you, George.
Excellent, Basil. Thank you.
Thank you very much for calling.
Appreciate
and good eye, GNTX. We'll be looking at that. Brent in Martinez, California. Brent, how are you?
Doing very well, Basil. How about yourself?
I'm doing well, thank you.
I wanted to revisit PBR, if you don't mind.
Oh, we've got our duo right here. I've even typed it on the chart. It says, wow, good call, George and Brent. This is still leg A. Can you believe it? You know, folks, we're looking at a market that is so intriguing. I'll explain what I'm looking at. There's a stock here that goes down in that H pattern, breaks down, but as it goes down from the previous low of 10.63 on the 5th of February, PBR, Petróleo Brasileiro, it's an ADS in the oil business in Brazil. And what we're looking at is it breaks that and goes down to 10.2. But as it does it, the MACD is just holding fantastically. And within the context, the stochastic goes from under 20% to over 20%. This is what I was discussing in my MACD and stochastic class just in that webinar just recently. And what happens, it goes to 98% in the stochastic. The MACD expands, and this thing in a single leg. What do I mean by a single leg? There's something that I call in the Chapman wave. It took me a long time to figure this one out. I put in an A on the first bar of the 18th of March, and then the next day has a higher high, so I move the A. It's called a floating A. The letter A just moves to the right because it keeps going higher. Hasn't made a peak. Doesn't make a peak on the 20th. Doesn't make a peak. Doesn't make a peak. And then it looks like today it just had to make a peak because it was so stretched with a candle from yesterday, a little doji candle. Lo and behold, it spikes up today. It is still A, and 13.98, as I mentioned before, is now a magnet for this particular move. Now, can it become a single leg A failure mode? Not if the stochastic holds at 98%. You remember what I was talking about just a little while ago when I was looking at whatever stock it was I was looking at with the stochastic in the 4% area? What was I looking at? And that's it. That was gold. With no strength at all. Well, what I'm looking at here is that this is at 98%, 2% off the 100% level, which is max. So this is George, you still in it? I mean, Brent, you still in it?
Oh, yes, I am. Yes.
Okay. So I'm going to make two recommendations. One is, it's a recommendation that we keep our eye, not on the stock, but we keep our eye on you, because that was fantastic. And number two is that it has 12.71 as support. There's no question in my mind that the 12.71 will be tested in the next 5 to 7 sessions. But will it do it before 1398 is hit, or will it do it afterwards? If it does it afterwards, it'll be a deeper correction. That'll start impacting the weekly chart. But boy, this is just, and I don't think this is all short squeeze. This looks to me like it held the channel that we were talking about way back. I had drawn this channel, and I said if it holds the 9-period moving average, that could be good. But it did it all in one shot, and hey, this is a beautiful looking stock, getting a little bit extended on a purely visual basis, because if it still maintains 97 or 95% on any pullback, that's still great, but it just looks obviously it's like a rocket ship. So you've got to expect some kind of a pullback. I don't even know what to tell you, because tomorrow PBR is ex-dividend at 44 cents. Did you know that?
That I did not know. I also had a question. Would you have expected that gap that it's getting close to and get filled?
Well, there's a gap below, but that is just it's done because it's climbed so high. But I think you had mentioned this before. The gap on the left side. You know, this because it's a foreign traded stock. There are always lots of gaps. But I tell you what I'm looking at here. I'm looking at the high of 13.85 from the December the 31st. That would, to me, that would just be a visual. I would just grab my horizontal trend line and go right there. And you're talking about the gap just below that bar. So here we are. So you're talking about the gap between 1350 on the 2nd of January and then the low of the 31st, which was 1358. Of course, do I even remember what I just said? 8 cents. You know, an 8-cent gap in a foreign stock that trades overnight as well. It's already taken that out, but I suspect that it's going to come back and test that area. And my only question is, does it go 30 cents higher to test 1398 first? You know what? Tomorrow is ex-dividend, 44 cents. So does that take 44 cents right off the stock? I think it does, right? Some stocks react a little differently. So if 44 cents takes it down to 13.25 if it was right now. Just be prepared that that's possible. And I would not be surprised if after the dividend change, in fact, there might be a reversal. Oh, I should have done this right away. I shouldn't have been talking away. I should have been looking away at my 120-minute chart. So I've got A, B. Oh, look at this. Let's just get, so that's a C, a G, or a C. So that has to be an A. All right, I'm just doing the 120-minute chart, and all I can say is B, C. This is leg T. I would not be surprised if we are within a day or so of some kind of a reversal. If that reversal takes it, and now I'm looking at the 120-minute chart, I should have done that before. The low of 12.99, that was at 11:30 on the 1st of 2 days ago, on the 1st of April, yesterday, 1st of April. It looks to me like if that's taken out, then it's going to consolidate between 12, somewhere around between 12.70, maybe 12.50, and maybe 13.30 will be the high if it does pull back, and that will take, you can expect it to have 3 to 5 days of consolidation if it does that. So now I can look at it a little differently, and what I would say is before the dividend tomorrow, you're going to get 44 cents, and I don't know, must be holders through tomorrow. I don't know how to quite play that because that's the only way I can do it. Brent, I'm going to suggest two things. One is, I don't know how much you've got left. You got the calls, right?
I have plenty of contracts. I actually have 100 contracts.
Oh, well, if you got 100 contracts, I would absolutely say, you know what, you just got a bonus today, the spectacular move of 0.43 up 3.26%. I would take something off. I mean, it just makes common sense. You're getting to an area now where there's going to be within 34 to 50 cents of some kind of a consolidation. So I would definitely take some off, and I'd be prepared to put it back and have patience putting it back. I would give it those 3 to 5 days if it does take 3 to 5 days of a consolidation. And then we'll see where it goes for leg B in the weekly chart. It might even be until late next week, and then the following week might be the time to get back in. I'm not sure. But I would definitely take something off. So I hope that helps you.
It does. I really enjoyed your seminar on the MACD and the slow stochastic. And,
good, thank you. I spent quite a bit of time getting that together, and I think I nailed a whole bunch of things that I wanted to talk about. Of course, always more things. We only had less than an hour to do it. But thank you so much. And if you have any questions, just email me. So congratulations on a fantastic trade, Brent. And I'm going to keep this here, right here. Wow, good call, George and Brent. So,
all right, have a great day, Basil. I
thank you very much. So, folks, I had an email here asking me, Basil, could you bring this up in today's show? I have the IWM putting in a low at 113.69 on 27th of March. I see a possible single leg A up with a possible H pattern developing. That's the H pattern I was just talking about with George. And regards. Okay, so now let me do this. So we're looking at what IWM, right? IWM right now having a nice day. It's up 23 cents, up 20 cents at 118.20 in leg A. Peak chart has made a peak D, and the monthly chart has E, but now we've started a new month, and that E can extend out to the 120-minute chart. In a moment, I'll finish it up, and then we'll talk about it. I'll be right back. Basil Chapman, Dow is up 40.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. And don't forget, please check out my upcoming all-day seminar, Saturday, April the 5th. Go to the front page of TFNN, check it out. It is absolutely, there'll be bonuses. There are all sorts of things going on, but the most important thing is it's a review of older techniques that I've refined, and there are some newer techniques that I've been working on for some time, and we'll be going through different chart patterns, looking at the patterns that are going to be very prevalent, very important in the coming weeks. And that, to me, is going to be a major part of this. The IWM right now isn't a single leg A. Yes, correct, Bob. That was your question. But it's what I call a gray A. Now, why do I call it a gray A? Because it's still well underneath the 120.58 high, all-time high made in March, I believe, the 3rd. Was that before the others? Yeah, March the 4th. And there have been lower highs and lower lows. So this is going to be really important because a breakout above means that you've got all that work to do in the weekly chart to start improving it. Monthly chart is still really strong at 91%. Look at the 120-minute chart. And what I did is I hadn't finished it in 120, notating it. I put in the D. How many Ds can you get? Look, a peak D right there at 120.26 high at 13:30 Army time at on the 21st. It pulls back from that 1:30 time frame, comes pulling back all the way, goes trough A, trough B, and then it goes to a C under the 200 period moving average, turns around as the stochastic turns up, MACD turns up, and it goes peak A, B, C, and now we're in leg D. And we will see if this is going to be a peak D or not. But the technicals with the stochastic at 95% says the IWM, the iShares of the Russell 2000 ETF are still good. Now, one of the reasons why I tightened up the stops in our short positions, and we've been in long positions now for a couple of days, is that the trend of the MACD and the stochastic and daily charts had held really well, and in some of the in the divergence between the S&P making an all-time high, as we saw, was that yesterday or whenever that was, and the SPY failing to make one, we got some divergences. I think those divergences are going to be resolved. My suspicion right now is they're going to be resolved to the upside. And then I've got to be very careful. Now let me just quickly do, so I said I'd do that. There are a couple of other things I'd written down. Oh, so the question is, in the daily, this is gray A. If it breaks above 120.26, it says absolutely. It's probably going to test 120.58, the previous, the all-time high. And that high was made at a peak D in the weekly chart. And as I say, the technicals there are not really they're not that great. So it's going to be important to break that horrible candle of last week in the IWM. That's because of the NASDAQ IBB and the NASDAQ biotech stocks that really dragged it down. And the weekly chart has got this candle that says I could have a trading range between just above the high and just above the low and stay there for a little while. So I'm watching the IWM very carefully. I think there's fairly limited upside, but there is some upside capability. Now, just real quickly, let me show you something very quickly. Here we go in the Dow. So the Dow chart has just extended leg D by going to 16,569, 4 points higher than it was yesterday. So in leg D, I always get a little bit cautious, and in the U-shaped pattern, it says just be a little careful because you must be watching the MACD and stochastic. Well, the stochastic is now at 83%, and the MACD is expanding. So far, I don't have any signals in the daily other than the letter D. And the letter D has previously gone into E and an F. I don't know if I can do that again, but I'm just saying I didn't want to go short just yet like I normally would do a D or E in the Dow. I just don't have the signals, but I'm watching real closely. So what I'm going to do right now is I'm handing it over to Larry Pesavento. Should be a wonderful show. Thank you all for being here. I look forward to listening to Larry, and don't forget, check the front page out for TFNN for all that information on Saturdays, all day seminar, and I'll be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.